Perfect. All right. Everything seems to be working. I like that. How's my audio, just for your purposes? Can you
I
hear
can
me?
hear you perfectly. Can you hear me okay?
Yeah, you're great. And okay, this works. All right, that's how we're going to do it. All right, fantastic. All right, now you're in Texas. Is it 1,000 degrees in Texas?
It is 1,000 degrees in Texas. 100%.
Centigrade.
It has been brutal. I mean, the last 2 summers have been brutal. It's 106 plus degrees the last like 6, 7 straight days, and so it's awesome. You can tell how hot it is by the speed at which my swimming pool evaporates. So.
Oh no! Oh my goodness! Yeah, it's interesting. Philadelphia has been reasonable the last 2 weeks. It's been actually glorious, I should say that, because it was 98, 100 degrees for most of the beginning of the summer. Couldn't even understand it. Or we had so many smoke fires from Canada that nobody could breathe, which was another, crazy nuance. Yeah. So anyway, all right, let's see what our count here goes before we have fun today. And okay, good. People are piling in. This is what we like to see. Welcome, everybody. We're going to start in a couple of minutes. I'm sure you've been on 1,000 webinars in your lifetime, especially over the last 3 years. And you know that nobody comes on time except you smart people. So we're going to be recording this program for posterity. And we appreciate you taking the time to play with us and see some of the cool stuff that we're working on. Because we think there's really a great application for accelerating your practice and delivering great value. So we'll be starting in the next minute as we give the people going back to Zooms time to get in here. Do some housekeeping here. All right. You ready, my friend?
Let's go.
All right, fantastic. Welcome, everybody. This is Adam Holtz. I'm joined here with Josh Smith, CEO of Virgil. It is great to spend some time with my friend and share some ideas with you. So welcome, Josh.
Thanks, Adam. Glad to be here with you.
Absolutely. Thanks, everybody, of course, for attending this program. As you probably know, either one of us, or maybe you've heard of us on social or what we're doing. We tend to keep it really, really real, right? Which means down to earth, authentic, and hopefully you can participate in this conversation. You can use the chat. We will be setting aside time for questions, unless we just riff and come into some unbelievable new idea that may require starting a new company. You never know, or some idea that hopefully helps you grow your practice. But certainly take the time to throw some chats in there, share with where you are. We just talked about how hot it is where we are locally. So if you want to take time to just throw in the chat, make sure it works. Tell us where you're calling in from or where you're viewing us from. And who knows, something else, maybe what kind of ice cream you like. Sometimes we found that these are really fun to share where you're from. And of course, what kind of ice cream you like, or pizza. Some people like pizza. Anyway, let's jump into this. Well, I think the critical thing that we realized when Josh and I were interacting over the past year or so is there's a lot of alignment behind what we're doing and the ethos we're changing in this space. And so we wanted to take some time to actually share with you what we see is actually happening, and also profile what we're doing specifically to help advisors accelerate this experience and deliver an unbelievable client experience. And nothing really, I think, speaks to that, Josh, quite like this idea of advice engagement that we've been talking a lot about. So let's kind of talk a little bit about how you got into doing what you did, so people know the origin story. I think that is always helpful.
Yeah, no, for sure. And appreciate it once again, Adam. Glad to do this webinar with you guys. The idea for Virgil really is one that emanated out of personal experience and some serendipity with a phone call. I had just exited a business and had the entirety of my net worth tied up in that business, and had a good outcome, and said, I need to choose a financial advisor. And kind of serendipitously at the same time, I received a phone call from actually a wealth manager out in California, out in LA, who, they said, hey, we've got this idea for this business. And I was like, wow, that really resonates with my core problem set, which is I have no idea how to objectively assess a financial advisor, because everyone I'm talking to, we start with the financial plan. We start with how old are you, and what do you view your risk tolerance as or risk profile as? And that's all well and good. But I was like, you know what? I've exited the business. I plowed all my money into the market right around the time that COVID had hit, and actually just after. So I got to ride that up. So I'm sitting on a lot of unrealized gains now too, plus having just exited. So now I'm talking about potentially transitioning. And I'm like, I need to be able to wrap my head around this. And so the idea of, providing a tool to financial advisors that, could start a conversation with, hey, here's where you are today, and here's where we're going as part of this process together, and be able to reflect that beautifully, was something I desired, in my own personal life. And hopefully at Virgil, we're a couple of years into this, started to bring on some really nice clients, and really started to grow nice and rapidly, and think that that's something that we're hitting on that hopefully people will see here today.
Well, it's really cool because you obviously experienced a problem that many of us have had, or our clients have had over the years, and just had no way to solve it. So we just accepted it. So I'm glad that you had this passionate, necessity-driven innovation that you're bringing to the marketplace. Really excited to where it's going to go. I think you have a real opportunity to make a huge mark on the marketplace. It's funny for Asset Map, not too dissimilar, right? As a recovering financial planner, 25 years now in the making. About 8 or 9 years into that, I had a similar problem. I couldn't handle the complexity that I was dealing with these financial decisions I had to help people make, right? There's so many different things that people do. It's not just the investments, it's the insurances, it's the banking, the debts they're taking on, the people that are involved. Maybe they have businesses, they have exits they got to think about. So the broad scope of financial planning tended to be relegated simply to the investment assets and whether we're making decisions. I wanted to go wider. And so Asset Map was my way of framing the conversation and understanding who matters, why we're doing certain things. And that wound up actually accruing significant value to my practice, because we wound up actually uncovering opportunity that we just wound up taking over. So from the AUM side, we grew our AUM to about $1.2 billion. Still did a significant amount of life production on the estate planning side, and that kind of went viral in 2012 when I showed it at a conference. So Asset Map is we'll call it a little bit more mature in the sense that we've been around, thousands of advisors, millions of people in Asset Map already. So if you haven't seen it, it's probably something you want to consider. And we'll create opportunities for anybody who's on this call who wants to learn more, find resources to learn about what we're doing. Let's talk a little bit about where the market is today. I think one of the things that both Josh and I have been kind of musing about is that there are some consistent problems amongst all of us in financial advice, right? There's a lot of time between getting to a credible conversation. And I'm sure you can relate here, Josh. The complexity of either the client's experience or the advisor it's palpable.
Yeah, I mean, you've either got to, I look at it as a spectrum, right? In order to get to personalization, you've got to deal with complexity, or you can go to the other end of that spectrum and just say a complete lack of personalization, and I'm not going to give you any complexity, right? And so one of the value propositions, you hit on it, right, is a person's financial life is way more complex than just investments. It's way more broad, but investments is certainly the aspect of what we take care of. We are seeing a tremendous growth of technologies in this space now to focus on everything from holistic planning to trust in the state to investments to really all aspects of a person's world. And I think that's coming on the backs of robos. We're going to replace us all to now, well, how can we enable the advisor to be extremely holistic? And so, as part of this complexity, I think advisors have a choice. Either don't be complex, or I boil that down to the capability to be personalized, or get personalized. And, you need to be supported with the right technology in order to get through the complexity necessary to do so. And so that's a big aspect of what we talk to people about.
Yeah, no, totally relatable. And I think, if you think about the consumer's experience, right, they get all these statements, they don't even understand what half of them mean, whether they're investment or otherwise. They to put them in the shredder, if you will, or they look at them and they don't even talk about it with their spouse. So there's really very little inspection beyond what we tend to look at. So if we're managing assets, maybe there's more oversight, but we tend to forget the fact that people are dealing with a lot more than what our little kind of niche or microcosm tends to be. And the challenge has really been, I think, scalability, Josh. Like, how do you deliver an experience to everybody that aligns with the vision or the mission of how you present your firm, right? So if we're saying we're going to take a fiduciary approach for everybody, are we actually treating everybody the same? We've tended to see that maybe 20 to 30% of our top end clients are getting financial planning, let alone ongoing portfolio analysis with the kind of rigor you're talking about. let alone the other 70% that have been kind of legacy clients that may have gotten us where we are. It's really challenging given this complexity and time to really scale advice delivery at the level that I think that we're able to do today. And so that's a real big challenge for I think both platforms to bust. One of the things that I tend to think about is that most of the human value that we deliver as financial advisors is really in these three critical moments there, as you relate to. Well, it's that first onboarding experience when or maybe not onboarding, but introduction phase where you're discovering whether you can even help a client, right? The initial conversations that really build the rapport and the trust early on till you can get to a recommendation. Then, of course, if you get the privilege of earning the business, you got this ongoing engagement thing. Talk to me about what you're seeing in the space with respect to these kind of three critical moments.
Yeah, I mean, we're very focused on the initial conversations and the recommendations and advice. And then ultimately we have the ongoing engagement, what I refer to as, the life transition aspects of what goes on. But I mean, we are seeing a real tremendous, and just going on the backs of something that you were saying as we transition slides here, we're seeing just technology be able to supply, a lot of additional capability, whether it be the conversations around AI, whether it be cloud, 2010 to 2012. The ability for technology to really just take the advisor and level them up from the perspective of advisors are generally really good on the relationship side, but the ability to level them up, to be able to have more in-depth conversations, to be able to talk more specifically, again, going to this idea of personalization, their problems. In our case, the ability to aggregate all of the investable assets into a single consolidated application in a matter of minutes, historically something that took forever. Right. And then to be able to correlate investment strategies to a financial plan, which is something that you'll see in our demo here today, so that you can start to get into the recommendations and advice. We've had people tell us, well, I've got to go from this system to this Excel file to this PowerPoint to this to that in order to achieve just, that conversation, let alone if somebody's wedded to ExxonMobil because I'm here in Texas and it's been in the family for 100 years, they don't want to trade out of it. Does that blow up my whole transition process, right? And so actually getting into the nitty gritty and leveraging technology during those initial conversations to really hear, personalize, and value what that individual wants and is meaningful to them, and to be able to have a technology that can, really help them move through that process all the way through to now I'm a client and potentially life transitions occurring, and walk me through that same process, something that we're really trying to achieve. And, again, we're hearing a lot more in the space just about, a desire to enable the advisor to get more personalized, more in depth across the spectrum of what, things like Asset Map is looking at in totality. We're seeing that pick up really, really, really quickly.
And I think the real kind of crux of that for all of you who are actually in the field and giving advice real time or supporting those that are doing that is that the human value of this, right? The real relationship currency that you build can't be overshadowed by the technology. The technology is there to accelerate that time so we can spend more conversational time, empathy time, relatability, guidance, giving confidence, and so forth. So what's really interesting these days is we've seen a lot of tech come out that really tends to say, well, we can just accelerate and take you out of these roles. We want you to actually spend more times with the clients. And we're actually starting to see many advisors transition from an annual review meeting to actually multi-review meeting, just to make sure that they're in front of their clients more. And I think that's really important. I think there's really three things that kind of came out of this before we show you what we're building and what we've built. And that's really speed, which I think is being undersold these days. As you and I both know, if we can get faster to decision-making, that really serves us. If some of you have already seen the recent work that Kitsis just did, and this just came out actually in the beginning of 2023, Kitsis report actually indicated that depending upon whether you're an AUM gatherer all the way through commission, that you're spending several hours creating on average a new plan, as many as 10 hours for most of us of back office work. But I found, Josh, it's just intriguing that literally, depending upon whether you're going broad or extensive in your research of multiple tiers of analysis, whether it's on the financial planning side, you're looking at 35 to 40 days of time before you can actually get to an action decision. So what do you think about this?
Well, there's another statistic that I found mind-boggling, and I can't remember the exact statistic, but it was something along the lines of 80 to 90% of individuals choose the first financial advisor they speak to. And it's a crazy statistic when you think about it. Now, a lot of that is how that introduction occurs. But part of that is also, as you think about implementing, a lot of times if people are transitioning, they may or may not be talking to one or more advisors. And in fact, we've seen
It's
this
true.
data play out in, Schwab and Fidelity have their advisor referral programs, and you would be shocked at the amount of people who react the most quickly
Sure.
to an individual, how much faster they choose that advisor than they choose any other advisor. So there's this real desire to see speed and activity, and for
Hmm.
whatever reason, it plays out in terms of the choice. And so if you're taking 30 to 49 days to implement a plan, if you're taking that long to really review, well, what's the tax impact? We made this recommendation, now what's the tax impact? Okay, let's back up and start over because it's got too big of a tax impact as we talk about tax budget. And you start to think about all these different trip points that you get as part of implementing a plan or implementing a recommendation. It's substantial, right? And we feel that you can compress current time by 50 or more percent.
Yeah, no, that's absolutely. I mean, when I started looking at this, I couldn't believe how many hours it was. I'm like, how are we able to do this in literally a few hours? And I realized it was because I was coming from a different frame, which was that if you look at the average numbers, even here from 2018 all the way to 2022, it's pretty consistent, right? The number of hours spent in data gathering, as well as the analysis, the recommendations, 10 hours each. And when you look at what we're doing effectively, and what this is kind of the interesting analysis, what our clients are telling us is that we're compressing this, like you said, 50%, right? If we can take that real bulk out of the center, would it help us deliver more financial triage faster to figure out if it's the right fit? Which I know that is really important when you think about trust. What's your kind of thoughts on here?
Yeah, I mean, look, we've said it a few different ways, but I'll be clear, right? I boil trust down into my very scientific mind. There's relationship building trust, which I think generally financial advisors are very good at. And then there is objective trust. There is the ability to build trust through objectivity. And when deployed correctly, right? Software and technology, especially if you use an example of something like a Virgil, right? Where you're showing this is where you are today, objective, same clear analytics. This is where you could be in the future. And this is the transition that we go through in order to get you there. You are having a conversation that goes beyond just, hey, you like me, we like you. You see that I'm a trusted financial advisor. Here are my designations, la-di-da. You're actually getting into the meat of what's going to happen. It's personalized. It's clear. I can make a pitch as to why that's important. And also what's important is, in sales, we say all the time, it's just as important to get to no as it is to yes. Don't waste your time in an area where, you may not have that opportunity. And what software can also give you is the ability to really assess this person and how appreciative are they going to be if you say, look, I can't beat this fee structure, and we'd have you similarly allocated, right? Yep. Focus your time on things, that you can win and that you feel like you've got a strategic advantage or a competitive advantage on. There's no reason why that shouldn't apply to financial advisors as it does in SaaS and other businesses. Totally. And candidly, we think that we really help solve that problem and add that objective trust and get to yes faster, but also clear that pipeline when it's not a good opportunity.
No, I totally agree with that. And look, building trust is really the only reason why ultimately people are working with you. Because remember, very often families are two parties, or not one. There's a financial CFO who's usually taking care of everything, whether they've got actually education that supports their CFO, and someone else is pretty much along for the ride. So building trust on both sides, both objectively and relationally, is really clearly important. But it's if you faster you can do that to determine whether we're going to do this is really important. And look, the reality is that people who are using the process we're about to show you are actually making more money. And that's really just unbelievable. The metrics, at least for us on Asset Map, our largest enterprises 7 years in a row already been averaging 43% more revenue if they're using this process, because they're getting there faster, they're seeing more people, and they're raising their hourly rate effectively because they're putting their time in the right place. The 30%, that's just really unbelievable, as well as your conversion numbers really just speak for themselves. I know we're going to hear some more about those numbers in a second. All right, so I think these are great opportunities to now show you what we've been holding back. I'm going to take about 15 minutes to show what's going on at Asset Map, what we're doing, and then what we're actually about to release. It's going to be some really, nobody's seen this yet, so this is the release moment. We're showing you guys early, and then I'm going to transition to Josh. We're going to spend the next 15 minutes, and then remember those questions in the chat to put them in there while you're thinking about it. All right. Let's move on. So what is asset map essentially? Asset map is really a combination of critical elements that we never really had in our experience. It's about collecting and getting to this financial triage fast. So what we enable for all our advisors, and that's actually a legit code. You can actually take a screenshot with your camera. Advisors today are finding ways to onboard or collect data before they actually decide to work with them really fast. In 15 minutes, a consumer can literally go through this. If you sent it to them on their own, or you did this at scale, you sent it to all your customers and said, hey, let me get up to speed on what's going on in your life. That experience they could do on their phone or on their device. And ultimately for the advisor, it builds an asset map report. What is an asset map report? Well, this is our kind of keystone experience. It is a visualization of all the people in a household, all the entities that matter, all the complexity and the relationships that have interdependencies of those who can own, control, or benefit from financial instruments. What does that mean, a financial instrument? Well, we realized a long time ago that it wasn't just the investments that were really bothering people. They had questions about their cash flows, because ultimately that's what the investments were all about. How do they work? How are they structured? Who controls those? Where are they located? What's the tax implication? What does Tim control versus what Christine has on her side? What are those income sources in the future as well as today? How do they make sense? Do I feel like I understand them? Are there business interests? Are there split interests in trusts? What do our joint assets and liabilities look like that we're responsible for? And what about the insurances that protect us over our head? Are they the right insurances? Do we have the right stuff? This builds a financial inventory, which clearly is visual, and it gives us permission as professionals to figure out and ask better questions. Why are we doing this? Is there intentionality behind the way we've structured our life? From this single diagram, we know not only who's involved, who's important, because they're at the top of the screen, but we also know where all the treasure is buried. And the big question is it in the right place? This gives us permission to ask questions of intentionality as well as haphazard. As you'll realize, many people have accumulated a bunch of stuff. They haven't looked at it in years. It's not necessarily intentional. It's idle, or it's not necessarily serving them. What we can do with Asset Map is we can change the discussion from the typical families that are always dominating the registrants, right? The ones we tend to talk to, right? Mom and dad, the typical husband, wife. We can handle every single type of gender or modern relationship. We can talk about the kids and what they're doing. We can talk about the businesses and the business partners and what we're doing to protect ourselves from them, as well as the trusts and any complicated structures you can imagine, split interest, offshore, crypto, anything you can think of. It can live in Asset Map, so you can have an intelligent conversation about it. What's interesting about this is that I think advisors have a lot of knowledge that they've put together over the years. They've figured out that actually sometimes there's missing pieces. So we also have the ability to overlay what your peers have. So think about Christine here, happens to be X generation. Let's show her what her peers also have that we see missing. So we have the capacity to overlay what we call a stencil, and you can build these stencils for user groups that let's say you work with doctors or lawyers or physicians in a practice in a hospital local to you, or a corporate structure where you work with, let's say, Merck executives. You can build stencils for all of these type of people to create relatability and personalization that shows that you know what's going on with their peers. And it's a great way to start conversations and talk about what we tend to see missing in the Asset Map. And since we were born of the generation of the yellow pad, we also have the ability to draw all over. For those of you who are in presentation mode constantly and you're educators at heart, the whiteboard, blackboard kind of becomes alive in here, and you can draw on any device and write an Asset Map. You don't even have to go into your Zoom tools and find out where the drawer is, the marker. That's really embedded here. The other thing that we've been really focusing on, Josh, has been, our signals approach. When you have this much data, and I know you guys have done a great job of giving indication, we can also tell you whether you're prepared to handle what we call the financial fire drills. These are commonly areas of finance that tend to not get the same level of attention. Like, do we tend to ask our clients, if you had a liquidity event, could you fund it? If you died yesterday, would your family lose the house? Right? We tend not to run this because we tend to focus a lot on retirement distribution, let's say education funding. And so the calamity planning, the brakes, the seatbelts, and the airbags don't really get the same attention in the inspection as does the engine and how performance is really going. And so we needed a way to create a forced run of financial planning events. And what would happen if, God forbid, these events happen? If you had longevity, you live too long, is that going to hurt you, right? Do we have the right assets and income structure? So we delivered signals. It's been really effective. You can also look at it at your entire book of business to start conversations. And one of the things that advisors really sometimes stumble upon is we have actually full baked in, we call them goal progress funding, called target maps, where you can communicate in 30 seconds effectively how somebody is funded for typical retirement analysis, and always track this up to date, continuously tracking every single day what we need to do today to be fully funded. And this effectively takes not necessarily the place of typical or traditional financial planning, but effectively allows us to scale advice because we can do this in 30 seconds. So we're basically doing full end-to-end experience in literally less than 40 minutes instead of, let's say, 10 hours to do data collection, understanding, high-level analysis, and is this a good fit for me as a client and a prospect. Interestingly enough, it's the treasure map that a lot of advisors really appreciate, a branded experience you can give to your clients. Here's where everything is. Share it with your non-CFO partner. And of course, put this in a special place with your wills, your trusts, the things that people are going to need when ultimately they're going to need to know where everything's buried. And it's interesting how often sometimes simplicity, not 80 pages, but one page can be very powerful to someone who's not trying to be intimidated and wants to feel like they have empowerment on this stuff. At the end of the day, before I show you this new project that we're working on, which is a great transition for Virgil, the insight we've seen from our product has really been, it's been really asset gathering, right? The people are using this process. Thousands of advisors now, several thousand actually, literally globally now, are finding the same implication. When you show people their map, guess what happens? You get permission to talk about it. And you get the questions about, is this really serve you, or can I show you another way that might actually help you? And the numbers on retention and adoption have just been triple relative to typical financial planning tools. And that's why I want to introduce this today, which is what we are calling asset map drafts. One of the biggest questions we've been getting over the years is, can you show me a before and after? Let me see if I can actually figure out how to do that. Okay, there it is. All right. Hopefully I'm still logged in. A typical asset map, as most people know, regardless of complexity, it's not really a value statement. People tend to have the same kinds of stuff, right? We tend to have assets that are controlled, whether they're intentional or I just accumulated them, or they're idle or not really managed, or let's say maybe overmanaged, or maybe they don't really work together. We tend to see people who have a lot of complexity. Let's say, why do you have so many IRAs? And gosh, we're missing some stuff up here. And, I see this, you inherited this account from Nana, right? That Exxon stock that nobody knows how it's managed. It's dad's accounts. Don't touch it because, I feel kind of connected to dad because I still have that money that he left to us all in one stock, or with their advisor that nobody has challenged for 20 years because they've had the relationship and nobody has really questioned it. So for over the years, advisors have asked us, well, can I show a before and after? Here's where you are today. I want to show you an alternative view. And that's really where this comes into play. I created this just before this meeting. It took literally 3 minutes. I'm going to show you what this application looks like. You can see here, I've recommended that they basically consolidate all of their IRAs as a result of some work that I did, and we want to consolidate this. And I basically, the reason we've done that, we've put that in here, basically want to take advantage of efficiency, simplification, and access to better managers. I have the capacity to actually accept this change, and it'll pass all those changes back through to core asset map if the client says, yeah, that's the thing I want to do. Other opportunities, when we find accounts that are out of whack, like this one I just mentioned, you can see I'm recommending a change. What's the change? I'm moving it over to our management. Okay, it was previously at Fidelity. If you saw it before, I'll hide that change so you can see it. Previously, it was at Fidelity. Nobody had looked at it for 1,000 years. I'm recommending we actually change it over to our management. So we can do this before and after. And for those of you that are in the protection space, you can see I just for fun, I put in a long-term care policy because I thought that was a risk for them in general. And you wanted to see how I did this. What's really cool and a good transition is that for those of us that have staff that do this work for us, it's a great opportunity for us to see multiple potential scenarios that they might want to show to a client and toggle between them. Say, well, what if we do this? What if we do that? These are the changes I specifically need to make. I need to take this complexity, make it simple. And of course, you can see here is I've actually had my team say, what was the ethos of this draft? And you have the capacity to now jump right into Virgil Wealth as an example, or any other place that you have your presentations in a stored file and so forth via hyperlink. So it makes it really easy for me to just bring up what Josh is theoretically going to share with us as a way of a seamless experience for the client, literally right here where we're talking about their inventory management. Okay, we are on time. I'm now going to transition to Josh. I'm not going to stop sharing here. Are you ready to share, sir?
I'm ready.
All right, here we go.
Let me share my screen. All righty. Adam, if you'll just confirm for me, you can see that.
I can
Take, educate,
see it.
generate.
Yes, I
Great.
see it. It says Virtual
Fantastic.
Streamlines.
There you go.
Okay.
So, I'm going to jump live into the application here in just a second, but just to kind of kick off the conversation with everyone, what is it that Virgil does, versus, asset map. And actually that last proposal is fantastic, right? The idea of consolidating, 3 IRAs into a single IRA, the idea of consolidating multiple brokerage accounts into one or underneath our management. We actually handle that transition process, right? Is the idea of actually transitioning proposal accounts and transitioning from point A to point B. We'll actually walk you through how we do that as part of our demonstration. But just to set the stage for everyone, we kind of consider the client acquisition and proposal management process from an investment management perspective, really taking on what we call the intake, educate, and generate components of what we do. And the intake component is, as an advisor, I can sit down, take financial statements, scans, electronic PDFs. I can send somebody an invitation to actually log in and actually type in their credentials. But what's been funny is that the vast majority of our clients only exclusively use the statement ingestion capability, because that's the way clients are willing to walk in and actually hand their statements down. So we extract all of the relevant information, positions, transactions, fees, tax lots, realized and unrealized gain loss, all getting extracted. That's nothing you ever have to worry about typing into any other application again, as long as you live. We're also sitting on top of, and this is very important, all of the ways that you do investing in your investment strategy. So whether that's a TAMP, a sub-advised, separately managed account process, rep as PM, all of the different ways that you can sit on top of your investments, or your investments come in labeled the way that those investments exist. So the our management, LLC, tax advantage strategy, right? All of those come into our application, get rebalanced whenever you rebalance them, and are available to you to propose as the investable assets for a client. What you're going to see in our application is then once you set up where you're coming from through all that ingestion, where you're going, you get the educate component. Today, we're up over 200 plus different analytics that we have. You talk about simplicity. We try and make it as simple as possible, but really it's giving the advisor a breadth of things to talk about, and then they can choose and make their proposals as simple or as complex as they want to with our generate capabilities, which is ultimately generating a proposal, also meant to use generate as in generating business. But it's that, kind of idea of moving you seamlessly through this process. Adam shared as I transition over to my actual application here, and we'll talk about Robert Herman, which is a real use case. Adam actually shared some of our stats. Our clients have seen a 50% acceleration in decision timeframes where Virgil's been deployed. Where that decision is yes, a 25% larger check. And in the statistics that we've run across our client base using direct feedback from our clients, a 30% increase in conversion rate from before leveraging Virgil to after leveraging Virgil. So exactly what we said, building trust faster in order to help win more business.
It works.
Our client organizations. So with that, we're going to go ahead and transition into Robert Herman. Robert Herman, again, this is a real life use case that occurred. Robert Herman had some money in an account with a specific bank. You'll actually see some of the custodial statements here in just a second. And so he actually showed up at an advisor that leveraged Virgil and said, hey, let me provide you with actually, I think it was 12 months worth of financial statements. And so everything that Virgil does is centered around this checklist, right? It's the idea of getting your investment data in, running an analysis, and then generating a proposal. So as I've already alluded to, I could send a client a completely white labeled email, your firm's logo and information would be up top here. This gives them the ability to, before they come and sit down with you, or rather than just slamming down, mail on your desk, it gives them the ability to actually upload statements or actually log in through, if you use Venmo, credential process into your bank account, right? You can do it either way inside of our system. As I've already said, the vast majority of our clients use the statement ingestion process. It's as easy. We do integrate with Box, we integrate with CRMs, or you can drag and drop a statement directly off of your desktop. or email directly into our application. When I say a statement, it is what all of you are going to be fully familiar with as a financial statement. We extract, once again, every position, every transaction, every fee, every tax lot, and all the unrealized and realized gain loss off of these financial statements. This information is not only extracted through, a typical OCR process, it is also validated. So when I pull $2 million worth of positions off of this financial statement, I'm going to expect within a margin of a couple pennies that my addition of all the positions equals the summary on this specific statement. So you can have real confidence that the data being extracted by Virgil is 100% accurate to the statements. To the extent it's not, we've got a team and a failover operations process that immediately talks to the advisor, immediately interacts with that advisor and says, we're reviewing this. This is where the issue took place. And we go from there. So there's a lot of standardization, normalization, and validation. Again, if you become a Virgil client, you never have to worry about extracting data from client financial statements ever again. And that's been a huge lift for a lot of our clients. All right, so we've got the data extracted. What then happens? As I've alluded to, Virgil has the ability from there to manage proposal accounts or manage the accounts that I'm going to pitch. Again, I can come in here and say, this is the Josh Smith or the Robert Herman, proposed investment. I can't spell while talking, apparently. Proposed investments. And then I can come down here and search a strategy. I can search a specific stock. I can literally build the portfolio or the composite of what I want to have this person in directly inside the application. I could save that down if it's a standard. I could save that down and use that for multiple clients, 70, 30, 60, 40, when you see alts. That's also something else that I want to point out is that Virgil is a full multi-asset class system. So we handle not only stocks and bonds, but derivatives, structured notes. We handle alternatives. We handle separately managed accounts. Everything that we do from a investing and from an analytics perspective is full look through as well. So we're looking through those ETFs, looking through those mutual funds, looking through those SMAs. How much Apple do you actually have in totality across your portfolio? You want to know how many transitions we've seen across advisors because they were 12% allocated to Apple. And when they came back and asked the previous advisor why, they were dumbfounded, right? Like, I did not know that was the case. And so we've seen things as simple as that. The other thing that I'll point out is we're not just extracting the positions. We're actually identifying the accounts and the account types that are available. So again, you're not even having to identify this as taxable versus non-taxable. That data can come into our application and be identified. You can then combine accounts together. So just what Adam was showing, I want to consolidate those IRAs. What is the actual, so in Asset Map, you've consolidated them. Now leverage Virgil to say this is actually the consolidation and this is the ramification of that consolidation in terms of transitioning the investments over. You can hold out Exxon, you can hold out Apple directly from this screen as well to the extent that you want to, if it's something that someone's just developed an attachment to. It's actually one of the most common questions I get on demonstrations, and my business development team gets on demonstrations is, someone's attached to an asset, they don't want to use it as part of the funding account. Can I hold that off? Yes, you can. So I want to make that really, really clear. So then once you've got where I'm coming from and where I'm going, the system goes to work in the educate component and we start driving our analytics. So right away, one of the things we try and do to simplify this for the advisor is to call out current portfolio versus proposed portfolio. And this would be a situation where an advisor should be licking their proverbial chops, right? Because here what we're showing is our scale runs from -5 to +5 with 0 being in the middle. A -5 basically means the current portfolio has underperformed or has more risk than, or in some way, shape, or form is doing more poorly on the metric than the proposed portfolio. So this is an instance where on a transition, I would be saying you have underperformed. And in this situation, not only have I left 400 basis points on the table, but I've done so with a higher volatility based portfolio than the proposed account. So I'm leaving money on the table and potentially, at least historically, and we'll get into ex-ante risk, I've done so with higher volatility. And so that's a situation that an advisor can potentially take advantage of. Now, as part of our proposal process, SEC marketing rules, some people don't like showing performance. And so you can eliminate that as part of the proposal. Anything that you see here that I show as an analytic can be shown or not shown as part of the proposals to the client. And so other areas in just, I'm not going to illustrate all 200 plus analytics we have. We don't have time to do so. But Virgil is all about explaining what happened, not just you underperformed. It was because of security selection you underperformed. And this is actually regressed back in this screen 5 years because you can choose multiple time periods. But asset allocation effect was minimal in terms of this advisor selection. What happened, and we saw this a ton in 2022, a lot of advisors rode the wave up with technology stocks, left them allocated going into 2022. Market crashed down, and it's not so much, okay, that wasn't typical. It was, why did you do that, right? And then the explanation of the security selection, what happened, going back to the advisor and asking that question, has been material for a lot of transitions. And again, Virgil is a sales enablement tool, similar to Asset Map, right? We're building trust. We're helping you close business faster. We are helping you create themes, objective themes, but themes nonetheless to focus in on in order to win that business and make that conversion, right? That's ultimately the goal of what we are trying to do here. Again, just trying to be time sensitive, not going to spend time running through every analytic. We've got a fully proprietary multi-factor ex-ante risk model, current portfolio versus proposed. We can see in downside scenarios, we have significant underperformance of the current portfolio versus the proposed. We've already highlighted the volatility consideration. So we're just clearly in a much more risky portfolio. The advisor has the ability to come in here, and if someone, right in front of you says, hey, I'm, concerned about the S&P 500 falling 30%, what happens in the current portfolio versus the proposed portfolio? We can answer that question on a dollar and a performance basis, within a few seconds. If rates rise 100 bips, fall 100 bips, what happens? All of those different kind of scenarios you can run immediately and on the fly directly within the application. All right. Diversification, as I've already alluded to, we're doing it both from a risk perspective, but also from a sector, geographic, asset class perspective. Everything we're doing is full look through. So when you see dark blue versus light blue or dark gray versus light gray, that's direct versus indirect exposure. So again, if you're pitching SMAs, ETFs, mutual funds, what's the underlying, right? Do we have too much of an allocation to the FANG stocks or to whatever the flavor of the day is, AI stocks, et cetera? Are we seeing that on a full look through basis? And that's something that we bring to bear on the equity side. We also bring that to bear on the fixed income side. And then we're doing things like correlation heat maps and so on and so forth. We're looking at ratings, we're looking at maturity profiles, all of those things in the current portfolio versus the proposed portfolio, so that you can give a very clear view to the client of where you're going and where you've come from. Now, two areas that we think are highly, highly differentiating as well for Virgil is the area of fees and taxes, right? I don't know how many of you are independent, maybe big bank, et cetera, but this is an area where we are looking at not only the advisory and the SMA costs, but the expenses of the funds, any load expenses, any interest expenses. Are there any transactional costs going on within the portfolio? And the advisor can also put in directly in our application their fee hurdles, right? So you can come in and say, first $1 million of wealth X, next 5 million X, next, X amount of millions. You've got the hurdles that you can put in, and the system automatically calculates those based on the asset levels of the person walking through that door. And so right away, we can tell you, hey, what are your total fees? What's the expense ratio? How do you compare? What's the dollar fee savings opportunity in transitioning? We actually can have a chart that shows you over 10 years, 20 years, if you got the same performance between the two portfolios, how much is 50 bips going to save you? A lot of compounded money, right? And so that's an area that you can focus. Whereas if you're charging more, why are you charging more? Is it services? Or maybe this is something you just don't want to show. All of that's available. And then again, in the theme of full transparency, part of that aggregate fee calculation is the underlying funds, right? Am I in alternatives? Am I in ETFs or mutual funds? Am I in things that have a lower cost elsewhere for the similar types of exposure? You can identify those things leveraging the Virgil application. And then finally, on the analytics section, before I'll hit very quickly on the generate, is the idea of taxes. So looking back, are there areas for tax opportunity from a capital gain deferral, qualified dividend, loss harvesting, or long-term gain perspective? But the area of tax that I really want to hit on is the idea of transition. So again, when you move a person from point A to point B, I don't want to generate $1 million tax bill for them. Right. So how do I do that? Minimizing tracking error as quickly and as effectively as possible and staying within a particular tax budget. And so I can explain to a person what that transition would look like in order to get them fully transitioned over time. Maybe that's 1 year, 2 years, 3 years. I can actually show what a transition looks like, the tracking error associated with that, and the actual income effects, yield effects on the overall portfolio by taking a stepped and measured approach to a full transition. And so that's an area where clients are really pushing us in our application. And so I've got all this, wonderful data. I've extracted it. It's all available to me either through Excel, an Excel plugin. I've got all these beautiful analytics. But the core aspect of Virgil is then being able to communicate with a client. So as an administrator, and I'm not going to walk through this process, but as an administrator, I can give each one of my advisors the ability to generate PDFs or PowerPoints if they want to manipulate it. I can have an alternatives-based proposal. The beauty is that as I move person to person or profile to profile, I come into the proposal section. Those reports are automatically updated based on the data inside of our application. And so just as an example, I've got a proposal here that gets generated out of the application. Everything is fully white labeled to you. Most of our clients show up with their PowerPoint, say, this is our PowerPoint, or they show up and say, help us figure out, what a good presentation actually looks like. This is in Virgil formatting, of course, but every single one of the charts and graphs that you see in here have been extracted and updated from Virgil for Robert Herman, specifically based on just going to that proposal screen, extracting that PDF, and I've got this capability to generate a proposal directly out of our application, client to client, really quick, really effective, lots of speed. And again, going back to the moral of the story, our clients have seen a 50% acceleration decision timeframes where that decision is yes, a 25% larger check, and they're seeing 30% more converted business. We feel based on that objectivity, that build of trust, that answering questions that have been lingering in the back of people's minds against the market that oftentimes you get hand wavy answers to, you can actually dive into detail with our application. And so with that, Adam, I don't know if you have any questions, but
I do. I have questions.
Fire away.
Well, I have questions here, and we have some questions there. I'm a reminder everybody that if you have questions live, throw them into the chat. We got some questions actually from our social media side that I thought was funny. But what you just showed me, give me an idea from the time that you've got the statements to the time you've got this, what we can see, this analytics, how much time are we talking?
I mean, we're really talking about the time that it takes the advisor to decide what to compare against, right? So statements get dropped. You're talking about a 2 to 3 minute process. So, the usual process that someone walks through, Adam, is let's just start the conversation, right? So here's your analytics, 2 to 3 minutes, drop the statements. Let's compare that against a benchmark, right? Your risk profile says 60-40. We'll compare that against the 60-40 off the shelf benchmark. That's the first thing they show. That process is 10 to 15 minutes, right? Then when you start getting into, all right, let's actually dive into more of a financial plan. Let's actually talk about what a transition would look like. I really like the, what you're selling here, what you're talking about. Then you start getting into manipulating the accounts and actually talking about asset location and things. That's really just conversations with the individual. Sure. So it's really the time it takes for you to have a conversation and understanding, and then you can reflect it and make the transition directly in system.
What is really interesting about what you're doing is that, and I think it's highly aligned with us, and we didn't talk about it, is that I've been really banging this drum that we need to get away from presentation and make more participation, these things. And if we're going to really empower clients to feel like they understand what's going on. Oh, I understood. I followed them. It wasn't just, I don't know what they were talking about. It seemed credible. It was the first advisor I went to. I know can't know what I'm doing. I'll just trust the first person I meet. They seem to know what they're doing, right? Don't know what you're paying, don't know, et cetera, like what you said. And I think what you've basically created is, theoretically, at least even with both of these tools, someone could literally come in an same day, an advisor would know where everything is. If they uploaded their statements beforehand or did the discovery meeting beforehand on their own phone, whatever, we literally can actually give financial triage first meeting and understand whether it's the right fit, whether we can actually help you, whether we want to help you, whether we like you, whether this is a case for my junior. You know what? I want to introduce you to my junior associate, or I need to bring my A team in. Hold on one second. And I think that that's really interesting because we conceivably, if the client or prospect did this before as a prep for the meeting upcoming, we would literally be able to know where to take this conversation, either roll in the EKG and the carts and the MRI, or, you know what, I think give me some Band-Aids and some Advil. This is really important because the question about scaling advice is really, I think, front and center for all of us, whether we're going to compete with Robo 3.0, 4.0, whatever the next thing's going to be, or the fact that we're going to have to deal with why should the next generation, who are going to basically be getting all these assets that we're managing for the boomers, why should they stay with us? And I think it's really interesting what you're doing, because your acceleration is a really important aspect here.
Well, acceleration, and then the ability, I mean, many of our advisors have come back and said, it was really great to sit down with a prospect in that second meeting, maybe the first meeting we grabbed a drink, in that second meeting, and we were actually able to share with them things about their portfolio that their 10, 15, 20-year advisor had no idea about.
Agreed.
And that was meaningful to that person.
Agreed.
They were like, I'm dealing with an informed individual.
Yeah. So that's the same thing with us, right? We because we're not just talking about the stuff that the advisor manages, we're saying, but why is this in trust? Oh, well, it's because I got this in trust. Did you know that your spouse is completely disinherited? No, I didn't know that. Okay. So we need to think about strategies to make sure. So there are lots of questions that I think most of us, even ourselves, have not addressed, because just the transparency isn't there. And what you're creating is just massive, immediate transparency. So you can say, wait a minute, did you know? Did you know? So that's what I think is really interesting. Yeah, no, very cool. I'd be curious. One of the things that came in on LinkedIn was, are you guys announcing an integration? So we could talk about this. Just to be clear, there is not a current integration between Virgil and AssetMap. We obviously are talking about it. There are scrappy ways to do this. The presentations that Josh just showed, we could basically make them launchable right from an actual AssetMap. So in a theory, you can really make this look seamless. Here's your map, here's your asset map, here's your Virgil report. So for those that are wondering about this, we'll probably continue conversations as there's demand from you all in the field to say, yeah, this is really what I want. Could you want to overlay maybe the Virgil score of asset map? I'm sorry, right on top of the asset map. Maybe we can give that feedback to say, hey, pay attention here. This is an important research that I've done. Let's look at it together. I think that could be really cool too. Other thoughts and questions, I see some questions are coming in. For Josh, when hire for sales, business development, have you focused on finance or advisory? I'm a little losing you, Jake. So for Josh, I don't know if you read this in the chat, let me know if this,
take a little look, and I'm going to stop sharing here so I can see a little bit bigger. So for Josh, hiring for sales, business development, have you focused on finance or advisory or a SaaS sales background? I think this person might be asking me, am I interested in hiring them in a sales role? That's second. So I would say we look for people who have a background in really advisory, right? So we want people who can talk the talk, right? The best, especially when you're a small business and you're not ubiquitous like Salesforce is for CRM or Redtail is for CRM in this space, right? You want people who've really got a background. Is Virgil scalable to office or firm sizes? Yeah, we've got organizations who've got advisors running from 1 to 3 advisors all the way up to 1,000+ advisor organizations at this point. So we've been able to scale really rapidly. It's usually one-day implementations, so there's not a long implementation process. It's really straightforward.
That's great. Yeah, same day implementation is really huge. We've been focusing on that a lot. Both of us have really focused also on customer success, making sure that the client, that you as advisors and clients are really empowered, because sometimes when you're putting something new in front of a client, you don't want to look foolish. So that means you have to also invest in the training and really commit to knowing it. But we also are same day implementation. You can be dangerous right out of the gate with both of these platforms. I did see a question here around Cetera. I don't know if that was specific to Cetera. AssetMap is approved. Do you want to talk about whether what's kind of the approval process, Josh, for Virgil in broker dealers?
Generally, yeah. I mean, we do need to go through an approval process. We do have several of them. I can't speak to Cetera right off the bat. I know we either are or imminently are. But I would say certainly for Virgil, we need to be approved just given the reflection of data and each firm's individual compliance perspectives on SEC marketing rules and all the FINRA rules, et cetera. So yes is the answer. And we're happy to address that directly.
Same for us. I think there's 32 some broker dealer approvals. Couldn't name them off the top of my head anymore, but certainly if there is an interest and you know it's not approved, reach out to AssetMap. Certainly can reach, just literally write an email to hello@assetmap.com with a hyphen in between it, and you can and we'll figure out whether you're approved or not, what that process is. So we have it pretty packaged up, so we know how to do it fast. All right, let's see. Adam, is the proposal part of Asset Map that you demonstrate available to existing Asset Map? It is not going to be released until Q3, which I believe is pretty soon. Q3, believe it or not. So that's our expected release time. So please reach out, Michael, if that's something you want either early access to or you have just some thoughts about it. And last question I have here is pricing. What is it? How do we get a feel for what's the structure of pricing for these products?
You want to go first or want me to go?
Either way, doesn't matter.
Yeah, I'll go. I mean, we charge on a per supported advisor basis. So in other words, if you've got one senior advisor and some support staff, middle office, back office, all of their logins are free in order to support. It's really geared around the book of business. And then, our range can be, anywhere from 1,000 a year to 3,000 a year, based on size, scope, and scale of the organization.
Fantastic. And Asset Map, pretty similar. Our pricing page is up on the up on our site, assetmap.com/pricing. You can figure out what's right for you. We actually run 3 tiers, Josh. Most people use our professional product, which includes everything I showed today, which includes everything from Asset Map to discovery and scaled kind of data collection, and then our signals and our diagnostics and our kind of speed planning. We do have an essentials, which kind of strips out planning for those that use other planning tools, and then an elite that has full practice management support and kind of data analytics for those that need it. I think one of the things that is also interesting, that both of us support the concept of staff and delegates, people that are doing your work for you. You shouldn't be paying full price for those people. They're clearly not revenue generating. They support the revenue generator as a sales enablement process. So we also have delegates that are at a lower rate. They can do all the work for you except delete your entire book of business when they're angry with you. So those are important aspects of capacity. Both of us can handle enterprises and firms for those that are representing larger organizations. And I think, given the interest that we see from you all in the field, that's going to kind of dictate how we continue to prioritize builds that create more efficiency, certainly between us. But I'm really excited that all of you attended here. If there's any last questions, make sure they get into the chat, which somehow I've suppressed, so I can't see it.
And I just answered a couple questions. I don't know if they were to me privately or if they were in the Q&A, but I did just answer a couple questions.
Oh, I didn't even see the Q&A. Okay, how about that? Got it. Fantastic. Thanks for doing that. Oh boy, I didn't even see these.
Will the recording for the webinar be sent out?
Yes.
Yes, it will.
It will be sent out.
There was a question about, can you go over the upload process for onboarding client data? Is it all manual upload, or do you have an AI enabled process that can fill in the data? We do, but really where AI comes into play is for scans and things like that, where certain assumptions are having to be made. And validation. So I want to make sure I also understand the question. So to the extent, you want to reach out, feel free. We'll definitely supply to attendees the appropriate email addresses. And for both systems, do they support the more traditional account aggregation capability rather than from statements? We certainly do. We have an integration through Plaid that people can log in and select the accounts. And then you can also combine that with statements to the extent people don't have logins or credentials. I'll let Adam speak for themselves.
Yeah. So for Asset Map, interestingly enough, we actually find 95% of the $1.5 trillion that's in Asset Map actually came from interview, right? Advisor asked the client, what do you have? I have an account at Merrill for 100 grand. We found actually to expedite the planning process, we needed to just get it out of the head of the client, and we rounded every number to the nearest 1,000. It was like, that was good enough in the early stages. As we evolve, we have the capacity to connect it to as many as 16 platforms, asset management portfolio, systems where we'll pull, once you're an existing client, then it makes sense to pull data for us. But in the front end, to do planning, we need round numbers, and we need to know the breadth of the complexity. So we find that actually the consumer can tell you that off the top of their head. And that's a faster way to go about it for us in the planning side. We are actually planning at the end of this year to be releasing a consumer experience that can be enabled for advisors. So that's really an exciting thing. I'm not announcing it, but we'll announce it when it's out or about to be out. But I know a lot of people are looking for ways to engage with the customer and give them a way to play when they're not in an annual meeting. So The only thing I had left that I wanted to ask you, Josh, is do you see Virgil being used as an ongoing management tool? Is this something that you would review every single year? In other words, run it against the portfolio that you've now acquired?
100%. So, some of our very first clients said, "Great, you helped me win this client. They've told me they want to see this at our review meetings now."
Yeah.
So very quickly, the yes is the answer, and we would refer to that a couple different scenarios. We refer to that as either whether it be the annual reviews, semi-annual reviews, quarterly reviews, monthly reviews. Certainly, life transition processes is when Virgil gets brought in a lot. Also, held away assets. If you do not have custody over the entire book, that's an area that can really play and help with aggregation. But the answer is unequivocally yes. We call that the retention component or ongoing monitoring component of what we do.
Right.
And it's really geared towards those review meetings or significant life transitions.
Great. That's fantastic. So that really just expands the whole use case, I think, right? It's not just acquisition, but it's also ongoing management. I think that's going to be really,
And all that ongoing management data, all your clients are available through our APIs and to all the global custodians and broker dealers.
Perfect.
So once they are a client on your platform and you're not having to go through that statement process, it's a simple API integration and all that data flows in daily.
Fantastic. Got it. So if they're already a client, you can basically get your existing accounts into Virgil as well.
Yeah, and that's when we supplement the current reporting systems that are out there.
Interesting. That's great. Do you perceive actually having a consumer experience, or is that just overkill?
We could we could at some point in system. It's really because of compliance purposes. People are being extremely specific about what they want. So PDF is still the best framework for us to do there. So it's up for grabs, but we'll see.
Got it. All right, cool. Well, thank you. Thanks for being here. And also for all of you that have attended and listened to us just talk about what we care about and are passionate. So hopefully if this makes sense for you, please take the next step and continue the conversation with us directly or experience this by setting up a demo. We hope that this has been valuable to you. Josh, thank you as always for the great work and innovation you're bringing to the industry. I'm excited about what we're all going to do. And I don't know if you have any last words, but thank you.
No, thank you, Adam, and thank you everyone for attending. Look forward to continuing our discussions going and ongoing, and appreciate the time.
All right. Thanks for everybody who made this possible. We'll see you guys hopefully soon.
Thanks.